Hey, what's up all of you beautiful subscribers? Welcome back to the Chapple Show. So what I want to talk about today is, did the stock market hit its peak recently? That's what we're going to talk about today. So as I go through this, let me know in the comments down below, what do you guys think? Do you agree with anything I said? Do you disagree with anything? Okay, but I'm going to give you guys a few points here. First off, let's go all the way back to essentially since the beginning of the year. Okay, let's go back to January 26th of 2018, earlier this year. January 26, 2018. So, from public opinion, from the news, what you would hear from, CNBC is that, the stock market's been pretty on fire, especially over the past 2 years, especially this year too. Everyone's thinking that the stock market's been on fire, but since January 26, 2018, I'm going to give you the stat here. All right. The S&P 500, so this is, again, if you've been listening to the channel, you know what that is, but S&P 500 is essentially an index of the top 500 companies in the United States for the most part. And so since then, since January 26, 2018, the S&P 500 is actually down. It's down about 3% since then. It's down about 3%, meaning that the top stocks, the ones that have been talked about as being rockets to the moon, have gone down 3% from January 26 till, October 2018, till about now. All right, now let's take a look at another index actually, Nasdaq. Let's take a look at the Nasdaq. So the Nasdaq is largely just tech stocks. It's similar to, it's pretty much the largest tech stocks on the market right now. That's what the Nasdaq is. And so everyone's been talking about Amazon, Netflix, Facebook, Google, how, they've been on fire. Maybe not Facebook. They've had some bad PR. But everyone talks about how, a lot of those stocks have been on fire, especially over the past year. But again, going back to January 26th, the Nasdaq is pretty much the same, if not down 1% as of right now. Now, who knows what it is today? Maybe it's up today, maybe it's down today, but it's pretty much stayed the same over the past year. And so again, this is kind of an average of the top companies, right? For the most part, the top companies on the stock market. So this year, for the most part, it's been fairly static. It's been fairly static. So what does this mean? Did the stock market hit its peak? Is it going to keep going up? Is it going to stay the same? Is it going to go down? Let's keep going here. All right. So again, some stats here. Tech, for the most part. So tech, Facebook, Amazon, a lot of the Nasdaq is on pace to have its worst month since Trump was elected. Since, what was it, November 2016? Was that when he was elected here? But the tech sector is having its worst month, since Trump was elected. So again, not a good month for the most part. And again, over the past 3 weeks here, let's go over some more stats. Over the past 3 weeks, the Nasdaq, so again, the Nasdaq is down 7% over the last 3 weeks. The Nasdaq is down 7%. Sorry if this is going to be messy. Nasdaq's down 7%, and the S&P 500 here over the last few weeks is down about 5%. So the S&P 500 down 5%, Nasdaq down 7%. This is not a good 3 weeks here. Now, I know what you guys are saying, this is just a correction. It might be, it might not be. We're going to keep going here, and, I'll give you some more facts and you guys can decide for yourself, and I'll give you my opinion on, did the stock market hit its peak? So, first of all, why did this happen? Why did the Nasdaq go down? Why did the S&P 500 go down? Why has it been a really terrible month for the most part? I'm going to give you some few stats on that too. All right, so 3 weeks ago, pretty much the day when the S&P 500 and the Nasdaq dropped off the face of the earth, bonds, they announced that interest rates and bonds in the United States, that the Federal Reserve announced that interest rates were going to go up again, which they probably should. Trump's like, oh no, what are you doing? You're messing up the economy. They need to go up. All right. And so the Fed announced that the interest rates were going up. I think it was just another 0.25 points. I forget what it's at now, but it's essentially Fed announced interest rates would be higher. And so what does this mean? Why did that affect stocks so much? Well, interest rates generally reflect the strength of the economy. Sorry, I have my notes out here. Generally reflect the strength of the economy, but unemployment is at a 49-year low. So again, now that's a kind of a fake unemployment rate, as I always talk about. The unemployment rate's what is it, at 4% or something in the United States? But at the end of the day, in terms of the full adult workforce, it's more like 30 to 40% for the most part. And if you include children and the elderly, more than half the population doesn't work. But again, that's a whole different story, so it doesn't matter. But so it's kind of a fake unemployment rate. But again, if it's using the same metric as it has over the past 10, 20, 30, 40 years, the economy is doing pretty well. Although a lot of these people, a lot of this unemployment rate, a lot of those people are actually getting paid less and taking 2 jobs. But again, that's a whole different story. That's a story for another time. Why did the interest rates affect the stock market? I should get back into that. Well, interest rates affect pretty much how much you have to pay on a loan for the most part here. So it affects how borrowers look at cars, at homes, how much they invest in businesses. This is a big one. So let's say there's a big acquisition, like some giant $1 billion company wants to buy out a $100 million company, but the $1 billion company doesn't have $100 million in cash. So what do? A lot of the times there's some stock stuff, but sometimes they take out debt to buy that company. So again, now that the rates are going up, maybe instead of taking out debt that would they'd have to pay $107 million for that company. Maybe now it's $110 million, $115 million, some number that is higher than it was. So again, this shouldn't affect it too much. The rates aren't going up that much, but it is something to think about. So that's one opinion. That's one reason why the stock market has not been performing well recently. Is because, again, the last 3 weeks, interest rates went up. Okay, number 2 was the Trump-China effect. The Trump-China effect, that's what we're going to call it. So the Trump-China effect, as you guys know, Trump is pretty much on a trade war with the entire world, including here in Canada. Although I made that video, the USMCA, the new trade agreement in North America, but essentially, why does the Trump-China tariffs, why does that matter so much? Well, it's because, as you guys know, pretty much all American goods, not all of them, but most of them, are made in China. So if there's tariffs coming on those, a lot of those big companies have to pay more for their goods. So for example, I don't know what the rules are. This is just an example. Apple, let's say they make a lot of their iPhones in China. If there's a 25% tariff or something around those lines of the iPhone, either they have to mark up their iPhone 25%, maybe consumers buy it less, so they have less profitability, or maybe they set it at the same price and they make less money on each iPhone. Either way, it hurts American businesses for those tariffs. Now, it could also promote small businesses starting up in the United States. That's his point of view. But for large companies, the ones that are in the stock market, these Trump tariffs are going to hurt. All right, so that's another reason why, if they go through. Although he's already done some, but he wants to do more, right? All right, so let's go to the next one here. The next point is the end of the cycle. End of the economic cycle. So this is something that I've been talking about for a long time. I think I made my first video on this in 2016, or was it 2016 or last? I think it was 2017, January 2017, somewhere around there. So I actually made a mistake in one of my older videos, but I've talked about this before. The longest time in history that the United States economy has gone without having a recession is pretty much exactly 10 years. 10 years is the maximum amount of time before you have a recession or some sort of, decent correction in the economy. The last time we had one, now I said in my old video that the last time we had one was late 2008. So that was the number I'm going off of. So I was saying that, it's been almost 10 years since the end of 2008, so the recession should be happening relatively soon if it does happen. But the end of the last recession was actually June of 2009. June of 2009 was the end of the last recession. So theoretically, we got another 8 months or so, 9 months, however long that is, until the next economic cycle. This should be the end of this bull market that we've seen. All right. So investors are aware of this, by the way. Investors, this is why I'm pointing this out, is that investors on Wall Street are very, very aware that the end of this bull market that we've had for essentially 10 years, although we've had a few dips, it's coming to an end soon. So that's another point. And here's why this matters to you. Here's what I wanted to point that out specifically, is because usually, not every time, but usually before a bad recession hits, the stock market kind of predicts it about, 6 months to 12 months in advance. So we're going to go back here to October 2007. From October 2007, which was, everyone was buying houses at this time in 2007. Everyone was still, actually real estate prices were down a little bit, but again, consumer confidence was really high. The economy was still doing pretty well for the most part. But from October 2007 until the economy collapsed in September 2008, the stock market kind of stayed the same, if not went down a little bit. It was not good. Now the economy was still humming along during that time, still doing pretty well. But the stock market, again, was kind of stagnant for the most part. During those, however long that is, 11 months or so, the 10, 11 months between those events. And so we might be seeing something like that again. Though, again, the stock market's been kind of stagnant for the past year or so. That may be a predictor. Now, I'm not saying it is, but it may be a predictor of an incoming, kind of bad recession. That maybe, I think it's going to be a moderate level one. It might be severe, it might be low, but it's going to be coming soon. All right. And so, again, does this mean that the stock market has peaked? Again, we're gonna keep going here. I'll just leave you with my opinion here. So here's some of the stats here. What do you guys think of this? Do you think the stock market has peaked? I mean, it hasn't really gone up for essentially the past year. We've had some dips going up and down and up and down, but from January 26th till today, it's pretty much been the same, if not a little bit of a loss. And in past, we've seen that be a predictor of an incoming recession. So maybe the stock market might collapse. Maybe it won't. Maybe it'll keep going up. Maybe this is just a temporary correction that we've seen over the past 9 months. It'll keep going up. Maybe this will disobey everything we know about economic cycles in the United States. It might. What do you guys think? Let me know in the comments down below. So, in my opinion here, we've had an economy running on borrowed time, in my opinion. It's been running on borrowed time for essentially since Trump got in office. As you guys remember, the economy was kind of not doing too well before Trump got in. And then all of a sudden, Trump got in, a bunch of confidence came into the stock market, tax cuts, corporate tax cuts, middle class tax cuts, giant deficits all around the world. Not around the world, all around the United States, I mean. But so I think that the Trump effect, that played a part definitely in spiking some confidence, but it's not responsible for this giant bull run we had from 2016 to 2017. The Trump is not solely responsible for that. He's also not solely responsible for the unemployment rate being so low. But he did play a part on it. I think that the economy's been running on some borrowed time recently, but what do you guys think? And again, from January 26th, I mean, we saw a temporary stock market. I mean, people forget that actually before January 26th, those previous 4 months before that, the stock market was on fire before January 26, 2018. For about 4 months, everything was going up. And then we saw a really big dip, a big correction. And so maybe this past few weeks, maybe it's the same thing. But again, since January 26th to today, it's pretty much been stagnant. And so let's see, what else do I got here? So again, that could be the same thing. The economy is still doing decently strong. In my opinion here, do I think the stock market has peaked? Just looking back at historical figures, in my opinion, this will close it off here, is that the economy is peaking. It's peaking and it cannot keep, based on history, it's going well. People are like, oh, this time it's different. It's never different. It's boom, bust, boom all the time. We'll go watch that movie on Netflix, boom, bust, boom. Happens with everything, with bubbles, with the economy, everything. With commodities, with assets, with like Bitcoin, anything. Boom, bust, boom. Essentially what happens is the price goes up and then it goes down, then it goes up, then it goes down, then it goes up, then it goes down. And that's what the economic cycle is that we're pretty much at the end of the boom, in my opinion. The boom that we should have stopped about 2-3 years ago and just restarted and went through a temporary recession. Instead, I think that this could be a little bit worse because of all the tax cuts. A lot of people have been taking out a lot of debt. They've had jobs, which again, good, job is good. But usually when consumer confidence is at an all-time high and the credit card debt's at an all-time high, car loans all-time high, mortgages not an all-time high, but getting there. Just in my opinion, this could be near the peak of the stock market. And I'm not saying take this as investment advice for you guys. I'm just saying be aware. I thought this was going to happen about a year or two ago. But again, Trump got in and again, the stock market just kind of took off, right? So maybe I'm wrong here. But what do you guys think? Let me know in the comments down below. In my opinion, the stock market is near its peak. Let me know what you think, comments down below. Now, I want to give one more announcement, actually. So this is, obviously, I run Joisk, the e-commerce marketplace. If you don't know what that is, please check it out. We have really low prices for a lot of items, especially video games, new releases. You're going to get 20 bucks off most stuff for the most part. But the big announcement I want to, so check that out. Check out joisk.com, link in the description. But the big announcement I want to say is that I'm making a new vlog series. And what I'm going to be doing is every week or so, I am going to try my best to start every week or two, try to start essentially a new company through Joisk. So for example, what I'm going to be doing is, because I own a marketplace now where I can sell almost anything and I know how to code so I can build almost anything online, is that one week I'm going to try to build like a t-shirt company. Next, I'm going to try to build whatever, a digital media company. The next, I'm going to try to build, you know, a hat company or something like that. And I'm going to document everything. So I'm not going to be saying one of those people that is online that's just like, oh, this is how I built my business. This is how I built my business. And reflecting back from stuff that happened 2 years ago, no, I'm literally documenting it from, you know, literally not know. First thing I'm gonna do is clothing, so like shirts and stuff. So I'm gonna go from not knowing how to make a shirt or to wholesale or anything like that, to hopefully vlog up to getting my first sale or something like that, my first few sales. Or, you know, maybe I don't sell anything. Who knows, right? But that's what I'm going to be doing. I'm actually going to be documenting the process from, you know, again, if it's just t-shirts, I'm going to be going through buying the stuff and making the shirts and the logos and you know, advertising, and then printing it and shipping it. I'm gonna document it all, and hopefully you guys will like that a lot. So sorry this is a long announcement, but I'm excited. So stay tuned for that in the next week. I've had to delay that a few days, but stay tuned for that hopefully next week. And that's all. I'm gonna thank you very much for watching. You're all very beautiful people. I'll see you guys in the next video.